Hey everyone, good morning, good afternoon, wherever you are in the world. Here to just give a real quick update on the market. It's been a really interesting day, but as I mentioned, this should be no surprise to anybody that we are where we are. Before I get into any of this, as you all know, this is not financial advice. I'm not your financial advisor. You are responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So let's go ahead and take a look. We're going to take a look at the S&P 500. We're going to take a look at NASDAQ. We're going to take a look at Bitcoin. I also want to take a look at Google. Google and I think that's the only one that's really interesting to me. I'll also take a look at silver and gold as we were discussing a couple days ago. I'm very bullish on these speculative assets like silver and gold. So we're going to go ahead and take a look at those too. It's going to be real quick. Going to be quick and to the point because there's a lot going on in the market and we need to focus on making money. So let's go ahead and do that. I'm going to start with we're going to start with the S&P 500. So let's go ahead and move over to the chart. So here we are. And we were looking at this. I did a little bit of analysis on this yesterday. I am still of the belief that we are going to see new all-time highs on the S&P. We are going to see new all-time highs on NASDAQ. I have no reason to believe that we are not going to make it to new all-time highs. We are holding bullish structure, and by structure, we talk about this quite a bit. I did a little bit of a redraw on the analysis on the S&P last night, and I believe this is more than likely where we're at right now. So I believe that we've got a nice clean 1, 2, 3, 4, 5, and then a nice corrective running flat scenario here. We have an A, B, C. So this looks good to put in a wave 2. There's good subdivision here. 5, 3, 5 down here, A, B, C, and then we've got a nice A, B, C to get into this fake out here. Again, A, B, C, the head and shoulders play that everybody was looking at here played out yesterday. And boy, I tell you, there was blood on the streets. People were cutting positions. People were going short. And look at where we are now. I did not exit my bullish positions yesterday. I actually added some. So if you're on the Discord, you know what I added to. You know how it's performing today. And so far, so good. And I'm going to continue to maintain some of these positions. I am shaving a little off the table. Some of my, we'll call them pie in the sky plays that I had that, were kind of invalidated yesterday. Like, for instance, I had an extremely bullish vertical on Tesla. And what that needed was Tesla not to drop as much as it did yesterday. It has recovered a significant amount today, not enough for me to keep that position, so I cut it. But all of my other positions are really doing unbelievably fantastic right now. I'm very happy with the way that the market is giving to the bulls today. And again, should be no surprise to anyone, as I have been clamoring for the last 2 weeks now that we're going to go to new all-time highs. And so I believe that this is where we're at right now on the chart. I think that we've got a nice little 1-2 that we built in here going into wave 3. I do believe we're going to go to new all-time highs on the S&P. I do believe we're going to go to new all-time highs on NASDAQ as well. Let's take a look at NASDAQ. So this, very bullish, right? So I have historically been saying that NASDAQ has more upside potential than the S&P does, and I think that is still going to remain to be true. I think NASDAQ is kind of a leader. We were showing this here. You can see that I did this way back at this time frame. I said that this was going to be resistance. Well, we tested it one time, we tested it twice. Good rejection here. Nice corrective move on this, by the way. And well, here we are. So we see the same structure that we saw on the S&P. So a nice little 1, 2, 3, 4, 5. And a nice little A, B, C to correct that move. That worked out very, very well. We hit our supply and then we went down into demand. We had a little bit of a test here yesterday. It was rejected, but we didn't make a new low. This looks decent. This looks like a wave 3 that we are in, right? On a lower time frame, on a smaller subdivision on Elliott wave. This looks like a wave 3. So this looks like we are going to break through this area of supply. And, you know, kind of going back to where our all-time high is, it's all the way up here at about 14,000, almost 14,100. Do I think we're going to get there? I absolutely do think we're going to get up to these prices. I think it's going to happen before next Friday. Like, obviously, it's not going to happen today. We might have a little bit of a dip, but ultimately, the structure looks good. And that's what I want you to focus on, the structure, right? Because the market chops and the market will fake you out. And if you're over leveraged, boy, I tell you, you could be sitting in your chair, butt puckered, and not know what to do. But I'm telling you, you have to know what the structure looks like. And did I know that unemployment numbers were going to look okay? Did I know that that new jobs were going to look okay? No, I didn't. But I've been saying for 2 weeks that we're going to be going higher. So again, this should be no surprise to any of you. I'm going to take a look at a futures contract here. So I am in 10-year futures contract here. I added yesterday. And why did I add yesterday? Well, first off, it looks to me like we have bottomed, right? We created a bit of a bottom back here. Nice move up. We had a corrective move down. But I added to my position yesterday. And the reason why is because the 1 hour, the 3 hour, and the 12 hour were all in oversold at the same time. Okay, this again should be no surprise to any of you that I would have added to my position on this. And what happened? Well, shoot, look at this. Significant move to the upside. Significant move to the upside. So again, this should be no surprise to any of you that I would have added to my position down here. And that has rewarded me in a very, very great way. And I've actually been considering closing that position, even though for the next 1 to 2 months, I'm going to be pretty bullish on bonds. Okay? I'm in ZB, I'm in ZN, I'm in TLT. So I have some exposure, some significant exposure to bonds. And if you're in the plus room, you know what this exposure is, and you know how I'm playing this. I've got some verticals on ZB. I have, straight futures contracts on ZB, on ZN. I've got some calls on TLT. And so far, so good. I have no reason to believe that this is a bad play. It's a longer term play. I'm looking for this for the next 1 to 2 months. But so far, this is going okay. Did I know that this was going to happen today? Well, no. But the structure looked good. You know, there's chop that is designed to get you to liquidate positions. Even though your positions may be good, you have to be able to stomach some downside. And if you can't stomach it, then you are overexposed. Okay? You are overexposed. If you had to have one of those moments where you're like, gosh, if it goes any lower, then I'm just ruined. Well, if you have that in your head, then you are overexposed. So one thing that I try to teach on the server is balancing your portfolio, having a good, diversified portfolio. Heck, I'm in indexes, I'm in stocks, I'm in bonds, I'm in precious metals. Like, I have a good diversified portfolio, and they are all performing very well. Now, yesterday, I would say that things were not performing well, but the structure held. And now we're being rewarded for not liquidating. I mean, look at ZN. This is a really great example. We just moved sideways all day. We were basing, and then we exploded today. Basically, when we had non-farm payroll, we had all of the economic numbers that were released, and things moved significantly in the upward direction. Now, could they have as easily moved downward? Yes, they could have, but the structure was continuing to hold, so I held my positions, and now we're being rewarded for that. Now we are definitely being rewarded for that. I want to take a look at Google before I get into Bitcoin. So Google, again, we have been watching this. I've got a count on this. So I thought that, we had the bottom here, wave 4. Now this is looking more and more like wave 4 here. And now Google is trying to push through 2,400. So we are in a call spread, a call debit spread on Google. We've already closed out our put credit spread. We already closed that out. We had significant profits on that. So now our Google Play to the upside, currently that call debit spread is worth $50. We picked it up for I think 24, something along those lines. The Google Play right now is up 106%. So yeah, we must have picked that up for about 24 dollars. Now it's at 50. We're looking to take this to $70. So we're looking to take it to 70, 75. We're going to have to see Google find itself up at about 42. Excuse me. Let me get to my Google chart here. 24.50. We're going to have to get closer to these upward prices in order for this to fill. But that's what we're looking at. We're looking for Google to really move higher. This looks, again, very bullish. So this target up here, this 1.272 at 24.93, we'll call it 2,500. We've been talking about that, and I think it is very possible that we see a move up to that price here in the future. So again, got no reason to be extremely bearish right now. Things are looking pretty good for Google as well. So I'm going to continue and hold that position. I will feel even better if it breaks 2,400. And if we get to that target for Google, I'll be closing it out. But so far, this is good. This is good. Let's take a look at Bitcoin, because Bitcoin has actually disappointed me. So, looking at this, I said, more than likely we were going to make our way, and I haven't changed this P&L. So this is actually from the video that I did the other day. I said that we were going to break through this upward move, that we were going to have people shorting up here. Well, we're still maintaining support here. So this trend line I haven't changed. We're still maintaining the support down here at this level. So this still looks okay. Actually could turn into a little bit of a leading diagonal on Bitcoin. I actually believe that Bitcoin is bullish. Even though this looks like, a textbook ABCDE. Right? This looks like an ABCDE. This would be that way for if you played it, you've got profits. I'm not saying that you should get out of that position, but I'm saying that you should be cautious because this support did hold, right? So if you get below this support, I would say that your short is safe. But for right now, you need to be very cautious because the rest of the market, again, S&P 500, NASDAQ, they're all bullish right now. And again, I have no reason to believe otherwise at the moment. So just be careful if you're in a short. If you're in a short from where I was discussing the other day at about, 39.5, just shy of 39.5, it's a decent position to be in. But just be ready for this thing to start moving up and against you because, if you're bearish on Bitcoin, there's nothing wrong with that. But the fact of the matter is this wave 4 can still come up here to like $45,000. It's still possible for it to come up here and invalidate this short. Then you're going to be thinking we're extremely bullish and that we're going to continue going higher. Then you're going to go long up here because you cut this short. So now you have no position to be in. You're going to be looking for a long. Well, and that's when it's going to fall. I still think that Bitcoin's going to find its way up here to the 40, 42, 44, maybe 45 region before it does fall. And I still think that there is high probability that it is going to fall. What the real question is, what's going to happen here? The structure says, because we overthrew here, this still is valid for a push down, but we have to break down below this trend line. And as long as we maintain above this trend line, I would say that we're going to continue to grind up. I do think we're going to continue to grind up. I think this is a really bad place to be trading with leverage, unless, of course, you can get these extremes. So just be very careful with that. I will let me take a look at AMC. I'd love to take a look at AMC. Is there anything that's worth playing here? I'm still frustrated. You can see this right now. We got a long position on AMC. Back here, right, it was beginning of January. We took a position because the 1 hour, the 3 hour, and the 12 hour were all oversold at the same time. And I said, hey, we should buy AMC at $1.98. Oh, man. Life is full of, what ifs. What if we held that position? We'd be up like 2,500% right now. Now, naturally, that's not the kind of trader that I am. I'm not here looking for a 2,500% play, but I do like to go back and take a look and see, where things are at, and what if we would have held that trade. If it was a buy and hold, would have been fantastic. But anyway, we didn't do that. So now, where's AMC going? Well, I have to take a look at AMC on a weekly. Yeah, we couldn't have known that that's what was going to happen, but here it is. I would say that AMC, I would not play it. I mean, shoot, this guy went all the way up to $72 here recently. Was that yesterday or the day before? A couple days ago, looks like. Would I be considering, playing this longer term? No. I would say this is probably a 1, then we came down to a 2, and then a nice little 1, 2, 3, 4, 5, 3. Could it go a little bit higher? Yeah, I mean, it may go up to about $100, but I would say that this is almost done. And I said the same thing with GameStop. I'm saying this about AMC now. You have to be very smart playing these. So for my audience, I'm going to be saying, don't gamble a lot of money on AMC. If you've got $100,000, I would really only be, willing to put in like $1,000 or $2,000. And on big moves like this, you can turn $1,000 or $2,000 into, $10,000, $20,000. But your risk, that's what you have to be paying attention to, your risk. I would be interested in waiting a bit to see, like waiting a few days, because what's going to happen, and it happened back here, we had a big move up to $20. We came all the way down to 5. So it was a 75% drop in price, but it took from January 27th all the way to February. It was a whole month. So we have basically the top here that happened a couple days ago. Give it a couple weeks before you decide to continue to play AMC, because the big markup has already happened. The big money has already been made. So there is no reason to really overexpose yourself to an asset that has already gone up a lot, 600, 700% over the last couple days here. There's no reason to expose yourself to that. So what I would suggest is just wait at least a week, just to see what the price action does, because if it comes all the way back down here to $20 from $52, that's a significant drop. And not saying that that's what's going to happen. No, I wouldn't short AMC, but I wouldn't get into high risk, calls either. So you just have to be careful with that. All right. I think that's all that I've got for right now. Hopefully I was very clear on, on my thoughts on the market. I've mentioned this in the past. I'm still very bullish. I still think that NASDAQ and the S&P are going to go to new highs. I still think that's going to happen. But of course, if this video did help you in any way, shape, or form, the deal. Like, subscribe, share all the good stuff. And of course, wherever you are in the world, I hope you're having a good day. Good night.